Hi, Mark Oswald, your host for Londonderry Heart, Home and Soul. With me this evening is Paul Dakota, loan officer with RMS Mortgage based in Bedford.
Yes, sir.
Welcome back again.
Thank you.
So I think maybe for the audience, we'll just talk about the market in general. We're taping this on May the 5th of 2016, but just kind of your impressions, maybe mine in terms of trends, what we're seeing in terms of activity.
Well, we're seeing as far as activity, it's a very strong market right now. Higher demand than supply.
Yep. Lack of inventory.
Lack of inventory is the common denominator of all the frustration.
At every price point.
Just about, yeah.
Including Londonderry.
Including Londonderry.
Wyndham, Hudson, doesn't matter.
Very desirable town, Londonderry.
Take a minute and describe for the viewers the difference between a pre-qualification and a pre-approval.
Pre-qualification is probably one of the more common forms of getting a buyer from the offer stage to the acceptance stage of that purchase and sale agreement. Pre-qualification is done by a loan officer who basically interviews the customer potentially over the phone, maybe in person, takes some information from them, runs their credit report, plugs their income and assets into the file along with the credit report, and basically determines their buying power. That's a pre-qualification.
So on the phone, a buyer is going to call you, and what questions should they anticipate? What should they be prepared, even in a phone call, 10, 15 minutes to address?
The basic identification for themselves, name, legal address, phone number, social security number, date of birth, and then more specific to income and asset information.
Right, okay, all right. And so now they're going to go out with a realtor. They're going to find a home that they want to purchase, and they're going to need a pre-approval.
Correct. Pre-qualification.
Right.
Yep. So basically from there, the client calls up, and if they're already in the system, as the file has been started, loan officer typically would get information specific to that property that they're interested in, price of the property, and annual tax bill, plug that into their file, make sure that that ratio works, that their income supports the obligations that they currently have, as well as the obligation they're going to take on with the new mortgage. And
condo fees if it's a condo.
Condo fees are critical if it's a condo. That's on our radar by all means.
And what's included? Because if it's water sewer, then that's one less bill. It's all inclusive.
Correct. You have your condo associations that basically some of those condo fees, all the condo fees for the most part, have a master insurance policy. Mm-hmm. Some cover walls in, some don't. And
right.
Certain loan programs will require walls in coverage in the event the master insurance policy doesn't have that. You can have your site condominiums that are individual single-family homes almost, but still have an association behind them.
Right.
And that may have a lower monthly fee or annual fee for the homeowners association, but not have as much coverage. Therefore, more insurance coverage may be required in the structure itself.
What's a common mistake, or what's something that maybe buyers are forgetful in terms of this process? What's the one piece of information that maybe they're not prepared for?
Biggest thing is waiting.
Yep.
Waiting. It's much better for them to be in front of the circumstances with a pre-qualification than after the fact. And it's occasionally I get a phone call at 8 o'clock on a Saturday night. Somebody that fell in love with a house wants to make an offer and hasn't done anything to start the process except look at homes.
Right.
So it's
and the fact that it's a seller's market, most sellers want that letter to accompany the offer.
Absolutely. It's key, critical. There's sellers that won't even consider looking at an offer without that. I'm sure the majority of them today won't even look at that offer without a pre-qualification letter, some substance behind it.
Right.
The old ready, willing, and able.
Be prepared.
Yes, sir.
In advance.
In advance.
Yep. Take a minute, Paul, and if you would, talk about forms of financing. You've got adjustable rate, you've got VA, FHA, conventional. Maybe walk us through those programs and what are the advantages, I guess?
Start with your three government loans. Your USDA, which is the U.S. Department of Agriculture, Rural Development. It's 100% financing. The specifics that go along with that may qualify or disqualify somebody could be their income. If they make too much money, they don't qualify. Geographics have a lot to do with the USDA, where it's available typically in towns that have a population of 20,000 or less. So unfortunately, Londonderry is not a qualifying USDA town.
And
Nashua,
Hudson,
Wyndham
is.
And Wyndham is. Wyndham, Bedford, some of your more affluent towns, you wouldn't expect Wyndham, Bedford, Amherst, Hollis are eligible towns.
Right.
So again, if you don't make too much money and you're in one of those towns, it's a 100% financing program. It's a great way to go. Basically, home ownership with little or no money out of your pocket.
Okay.
The second one, very popular also, is an FHA loan. FHA is good in any town, any city in the United States. with a 3.5% down payment. The 3.5% down payment doesn't even have to be the borrower's own money. They can get that as a gift from a family member, use that as a down payment. There are state programs that offer grants. The grant can be used in lieu of down payment.
Right.
There may still need to be some funds of the borrower's own money into the transaction, but for the most part, it's ways to reduce it down to almost ridiculous. And then one of my favorite forms of financing is a VA loan. Mm-hmm. It's a little thank for our veterans. It's 100% financing to the veteran. And the veteran can also, like the USDA and FHA, is allowed to negotiate with the sellers that the sellers can help pay for some or all of their closing costs. So
right.
A veteran's loan is basically, again, another loan where, if negotiated accordingly, can achieve home ownership without any money out of their pocket.
Right. Okay. What's the advantage on a conventional mortgage?
Well, it seems that in some of the markets today and some of the properties today that the sellers appreciating the conventional financing pre-qualification letter as opposed to the government ones. With the government loans, because they're higher risk, with lower down payments, they
right.
become higher risk. Mm-hmm. That the FHA or VA are looking for maybe one or two more tests, like a pest test or a water test when the property is serviced by a well, or they're looking for a slightly better condition of the property itself. Mm-hmm. So there's certain property conditions that conventional doesn't put as much emphasis into. Whereas the government loans do. So there's people with preferences in those categories. Unless there's issues with the property, typically when you go out with somebody does their job properly, if a loan officer knows what they're doing, when they put their name on a pre-qualification letter for a VA loan, a USDA loan, or an FHA loan, there should be no issues with it unless they're property related going forward. So.
And one advantage may be no PMI requirements.
No PMI requirements with a conventional loan.
Yes.
There's no PMI with a VA loan either. That's
right.
Again, huge benefit VA. No PMI and no money down.
Presumably that gives the buyer more purchase power.
Exactly.
You know, they're not tied up with that monthly.
They're not losing their buying power to mortgage insurance.
Right.
Yeah.
Other thoughts? Just on the lending
again,
process?
I cannot emphasize enough that anybody that's in the market for a home, the first step should be talking to an experienced loan officer that works for a reputable company. Right. The value of that goes the distance. It's unfortunate. There's times where they'll have a credit report run, and there's stuff on there that they knew about and thought was taken care of, or even worse, there's stuff on there that's totally in error.
Right.
And some of those things can be corrected overnight. Some of those things take days, weeks, months, maybe a year to correct or take care of.
You and I have worked together, and we've both discovered that many times a buyer is ready, fire, aim. They can't wait to get with me and go out and look at properties.
Exactly.
And if they don't have, that pre-qualification, they're looking at something that's well beyond their means.
Typically, or unfortunately, again, something might creep up and all of a sudden they're not qualified. Or what I see happen a lot is not a lot of people can sit down and calculate what a mortgage payment would be, especially when you start factoring in stuff like mortgage insurance, like PMI and whatnot.
Right.
So what they think the monthly payment is going to be, and ultimately what it ends up being, is they fall in love with something potentially that they can't afford, can't qualify for, or don't want to take on a payment that large.
Right.
So again, the value of doing all of that up front in advance is definitely something that they need to give serious consideration
My
to.
message I convey to buyers constantly is you want to be going into this process with confidence and with a comfort level that it's something you can reasonably afford.
Absolutely.
Because when the car dies and you need repairs or replacement, you don't want to be house poor and now you're trying to walk to work.
Right.
Doesn't work.
Right. And we'd like you to go to work to pay that mortgage. Okay?
Exactly.
There's a little catch there.
Exactly. Just the small things, right?
Little details,
Well, thanks for your time, as always.
Welcome.
Thank you, Londonderry, for watching. If you have further questions about the lending process, contact Paul, whose name and contact information will follow in the credits, as will mine. Thank you.